Dear clients, welcome to Phillip Securities Research Weekly Market Update. This week, we will summarize for you the 3Q 2012 financial results of the property developers under our coverage. CapitaLand reported PATMI of 74.5 million for the 3Q, increased 29% year-on-year, largely in line with our expectation. Further recognition of sales from its overseas projects shall support earnings in the coming quarter. CapitaLand backed a residential site at New Upper Changi Road through a GLS tender in October. But the break-even price of $1,002 per square foot is pretty high in our view, which translates to thin margin of 4 to 16%. We expect minimal impact from the new site to its share price. CapitaLand 3Q PATMI of 148.5 million beat our expectations. Its 9-month-to-date PATMI forms 76% of our FY12 estimates. The earnings, mainly supported by sales recognition as well as strong performance of its shopping malls and fee-based businesses. In terms of investment, year-to-date it has committed 3 billion of new investments. OUE results were slightly below our expectation at the associated company level due to the subpar occupancy at One Raffles Place Tower 2, which stayed at 60% in the quarter. Other than that, OUE Bayfront and Crown Plaza Changi Airport were contributing meaningfully to its bottom line. Much of the attention is now centered on OUE's attempt to bid for FNN, which exposes OUE to risk of overpaying for FNN in a bidding war against Thai Bev. Given the uncertain acquisition price at the current juncture, we have since downgraded our recommendation for OUE from accumulate to neutral. CMA reported a strong set of 3Q 2012 results due to new assets in Japan, which were acquired in early 2012, and improved operating income from China shopping malls. In the quarter, there were 6 shopping malls in China completed by CMA. We expect contribution from China to improve further in quarters ahead as these malls' operations optimize. SC Global managed to erase the earlier losses to report PATMI of 2.9 million for the 9-month 2012, buoyed by recognition of sales from its Kairong project in China, which completed in the quarter. Hobby results were largely in line with progressive recognitions from project and the completion of its JV project, the Pravis at Holland, contributed positively to its bottom line. For 4th quarter 2012, we expect the completion of Trilight shall support the earnings in the coming quarters. However, earnings in FY13 are expected to be weaker, with no more major residential project completion. Nonetheless, the completion of the Metropolis in 2013 and the continuous share buyback by Hobby shall provide some form of support to its share price. Sales progress of the developers in the quarter show mixed results. CapitaLand sold more units in 3Q from its Singapore projects, mainly from the luxury, while its China operation saw lower sales. CapitaLand sold lesser units in Singapore as there were no new launches from Sky Habitat, but sales progress in China continued to improve. Hobby continued to experience slow sales from its Singapore projects, while SC Global saw moderate improvement, mainly from its completed project Hilltops. Most of the big cap developers saw net gearing trended up in the quarter, in particular CapitaLand and CMA, as the group continued to deploy capital into works after the series of acquisitions over the past 2 years. Gearing of OUE remained unchanged, while Hobby and SC Global trended lower over the quarter. With that, we continue to prefer diversified developer CapitaLand, as we believe it could benefit from the bottoming out of China economy. Thank you for watching and stay tuned for next week, Phillip Security Research Weekly Market Watch.